Hey team, it's Ray Campbell, Fairway Independent Mortgage. It is Tuesday, August 1st, and wanted to send you your update for this week. We've got a really big week this week. A lot of information coming out, and we're going to be at the mercy of the market again. But I think we're going in the right direction to leave even more than we were previously. So real quick, interest rates are just basically, I mean, they're still high. We know that. There are options to have those conversations with your buyers, with your sellers, and those conversations are all surrounded by interest rate. Okay, so we are in the sevens for the interest rates. Take your pick on which seven you want to use. If you want to use 7.875, or if you want to use 7.125, or in the high sixes. Depending on, again, how they want to structure the loan. There are so many different things going on right now with buy downs, with permanent buy downs, and temporary buy downs. The permanent buy downs are debatable. It's a numbers thing for us. Okay, so keep that in mind when you're talking to your people about buy downs. For example, some of the conversations we have is in normal market, a 1% discount. So 1% your loan amount as a closing cost is a discount point, okay? If they pay that in a normal market, that's typically going to reduce the interest rate by, on a 30-year fixed anyway, by about 0.25%, okay? Kind of a rule of thumb, if you will. That means that, interest rate's gonna go from 7.5 to 7.25. Not a big move. For the price of homes that we have right now too, I mean, you're looking at $700,000 loans, which means that's $7,000 in closing costs. And the interest rate moving down is really only going to be, $100 a month, something like that. Of course, it depends on the loan amount. And so we just have to do the math to see if that's going to make sense. But right now, there's compression between the mortgage coupons, which means that 1% may actually lower the interest rate, not by 0.25%, by 0.5 or 0.75. The most I've seen is a full point. So it's really what the buyer needs, what the situation is, what you can negotiate with your sellers, with the builders, of course, with the builders' lenders, with lenders. I mean, all over the board. Talk to your people, talk to your team, see what you can do on those interest rates to help relieve that, okay? So that's what's going on. We have a huge week with lots of information coming out, and I'll kind of give you a rundown of that real quick of what's coming out and when. It is starting here in about hour and 45 minutes. Actually, no, 45 minutes, sorry. On when these reports are coming out, okay? So one of the big focuses, so we have economy and inflation, right? So this week is a big week because we have something coming every single day that can actually move markets, okay? So we have today starts manufacturing reports. And we get those again on, when is that? So manufacturing reports are going to be again on Thursday, okay? So we get some reports today, and then we get them on Thursday about manufacturing. Now, there has already been talk about the manufacturing, part of the economy being in a recession because once COVID ended or lifted, the restrictions, people were able to go. So they were able to go and get away. So they weren't just buying things anymore. Now they're going on vacation. So this is also part of where we go into the ADP jobs number, which comes out tomorrow. Now remember, this was the big one. This is the one that hurt us the most because there was this huge surprise number. We were expecting 228,000 jobs. We got 497 jobs last month. That was a big surprise. We are, again, the numbers here today, tomorrow, we're only expecting to have, let's see, what was it? 189,000, right? So 497, 189,000. We were only expecting 228. So here's the thing. That's going to be a big one. If that number comes in anywhere close to that 189, it's going to show what everybody has been saying for a month, that 497 number is a fluke. Okay, there's going to be a revision down. There's been a lot of talk about that, so we'll have to see what happens there. We have crude oil inventories that comes out after that. Then we have the JOLTS reports, job openings, and then on Friday we have non-farm payroll numbers and the unemployment rate numbers. Okay, so everything that we're looking at this week could be a big mover, okay? So just strap up, just be ready for those big moves. When your buyers freak out this week, we're going to be on the phone all week long with buyers who are not locked, who are waiting to see what's happening, or they can't lock in yet. It's going to be big moves. It's going to be all over the place. Just keep that in mind. There's a lot of illiquidity. So when, one person does something or one company does something or one area moves, they're big moves, and then we get big moves back the other way. So lots of movement this week. Just kind of hold on for the ride. And if you guys have any questions, if you need anything, if you just want to talk about this or you need some information to give to your clients, let us know. I'd be happy to spend some time with you on the phone and going over some of that information and why it's important and what's going to happen. So we'll get into a little bit more of a deep dive on some of these reports now for you and tell you why they matter. And looking forward into, of course, the August and September inflation reports, okay? So manufacturing, right? So I kind of touched on it. Manufacturing is already showing that they're in a recession, that people are going out and getting services and going on vacation and doing all of that more once the pandemic started to cool down and things started to open up and they could go places without wearing a mask and all of that. So they stopped buying things because they were stuck in their home. And so manufacturing is coming down, and it's already showing that, that's already in a recessionary, trend, okay? So the ADP jobs numbers, actually, let me take a step back real quick, because the manufacturing, that transitions right into the jobs numbers, okay? So here's where we're running into an issue with the jobs numbers, okay? A lot of the reporting, and if you look at different parts of the jobs numbers reports and employment numbers, they're coming down. And when we look at that, the jobs numbers are coming down, and it's because of what's happening with manufacturing, with people not buying things and going shopping. Some of those retail numbers are coming down, and that all of those things are happening, but then they're offset because people are going to vacation. One of the biggest areas in the jobs numbers that we're seeing actual growth is service sectors, hotels, restaurants, people actually going back out to eat, going on vacation, okay? So that's where we're seeing those numbers come in unexpectedly high on the jobs numbers, okay? So as people start to slow down their spending, those numbers will come down too. But remember, those numbers are also a little skewed because it's not that we're really growing that much in those areas. We're replacing and have been replacing the jobs that were lost due to COVID. So it's coming back. Those jobs are coming back into place. And yes, that area is growing because we have an artificial push into that because people were cooped up in their house for years. So it takes a while for people to get used to, hey, I can go and I don't have to do it today, right? They can go in a couple of months, or they don't have to do one every single quarter or whatever. So those things will slow down. But that's what's happening as we see one area go into recession. Those job services or those service jobs are coming back and slightly growing in that area. But the big thing is replacing the jobs that were lost during COVID. Okay, so ADP numbers, of course, just show that the economy continues to move and grow. And as those numbers come in higher than expected, then the Federal Reserve is going to want to do more, and nobody wants that. Okay, so that's why the jobs numbers are important. This one I find really interesting because it's also part of a news story that I was watching the other day. Crude oil is going to come in, crude oil inventory. So we all know that inflation is the thing that needs to move down for interest rates to get better, long-term interest rates, mortgage rates, right? So crude oil inventory coming out showing how much crude oil is available is going to affect the price of gas. So what we also saw was this record heat. We all know how hot it is outside, right? Our ACs, my AC guy is going to be here in probably 10 minutes, right? So we all know that this heat is killing us, right? And what's happening is the refineries are being essentially stressed, and they're worried that they're not going to be able to keep those refineries going at the pace that they need to keep going, as well as going into hurricane season. And if we reduce production, right, reduce supply, and the demand stays the same because people are needing to heat or cool their homes from the heat, they're wanting to go out and be someplace else and not be stuck in the house or in the office, or they don't go outside, so they want to go to the mall. Like, different things like that are going to change the demand on crude oil and essentially gas prices. We just saw those go up, and that causes inflation. And so that's going to feed into the August and September inflation numbers, okay? So we'll have to see what that's going to look like. And then, of course, the jobs opening and the non-farm payrolls and unemployment rate coming out Thursday and Friday. We were just talking about all of the jobs numbers, the ADP numbers that are coming out tomorrow, which is the big one. But at the end of the week, we do have job openings, non-farm payrolls, and the unemployment rate as well. That's going to tell the Fed and everybody else, hey, this is what's going on in the economy. It is slowing, okay? And as long as the economy is slowing, that's a good thing for us right now. We need to slow things down. It will calm down the Federal Reserve a little bit. They did take a step back at their last meeting, so that was good on what they were going to be doing. And of course, they raised interest rates, but they did mention that they are aware that what they have done is working. So that is a very good thing for us. It definitely helps the situation knowing that they realize it's working, that the numbers are coming in lower. They're just not as fast as they wanted to. And they can't just come out and say it, but they kind of open the door for, them to kind of take a little bit of a easier approach towards what they're doing right now. And that was all good things. Okay. So I hope that was all good information for you. If you need anything at all, feel free to reach out to me or my team this week. We'll be happy to have any conversations you need to, or we can talk with any of your buyers or even your sellers if they have questions on what's happening and why. Have them reach out to us. We'd be happy to talk to you guys. And of course, as I mentioned, so a lot of you are going to be receiving the text message too, as to kind of bring this back together. So we are moving over from our text message videos to YouTube and trying to get some more information out for you guys here and for your clients and your buyers and your sellers. So feel free to subscribe here if you want to get notified when we start putting some updates and videos on here for you as well. And you can share these links with anybody you like for whatever reason, okay? So I hope you guys have a great week, and we will talk to you again here soon. And if there's any big changes this week, we will, of course, let you know what's going on. So take care, guys. Bye.